All right, welcome back, Rebels. So I have a quick little video today. I had some time and I wanted to go over like the top five things you need to know when investing in alts. So I've kind of condensed some things down into what I find probably the most helpful way to view altcoins in the crypto space. So I'm going to start off with lessons on liquidity and market cap, and then I'm going to discuss TVL, and then once we kind of have an idea of liquidity and how these markets work, then we're going to dive into some charts and actually look over some buy zones and learn a little bit more about overbalance and time and price, some things that'll give us a little bit of an edge when trying to find good opportunities in this space. So, and then if we have a little bit of time, if I'm quick enough, then I have an extra little bonus that I'd like to show you. I don't see anybody else showing this method of measuring alts, and so that'll be really unique. So stick around for that. So, first thing I want to get into is liquidity and market cap, and I just wanted to have like a little visualization so we can understand what game we're playing. So right here, I kind of have just to visualize the how much money or the market cap of different asset classes. So as you can see, the largest asset class by far is real estate, and the market cap of real estate is $400 trillion. So you can kind of think of market cap as um, it's not really how much money is in the thing, but it's market cap is basically just the price of something multiplied by the supply. So yeah, and that's really it. So it's just a ratio, and it's used as a measurement of like how large a market is. So you can kind of look at it as how much money's in the market. It doesn't necessarily equate that in dollar terms, but it's just to understand like relative size. So we have the real estate market of $400 trillion dollars. The S&P 500 is $50 trillion dollars. And then we got Bitcoin, which is only $2 trillion dollars. And then when we when we zoom in, the altcoin market is half a trillion dollars. So in order to understand why do the altcoins and Bitcoin outperform these other asset classes so much, it's basically how much capital is required to to grow that market capitalization. So as you can see, like in real estate, you know, it's 400 trillion market cap. In order to double the size of the real estate market, you'd have to add $400 trillion um, in market cap. So in contrast, if you wanted to double the price of BTC, you'd only have to go up $2 trillion. And then also in contrast, if you wanted to double the entire altcoin space, you'd only have to add $500 billion. So it just takes less capital in these smaller markets to actually expand them more. It's going to take a lot more capital influx to grow the real estate market by double and so on and so forth. So that's the reason why you get such outsized gains in the altcoin space during short periods of time is because the market caps are so small, it doesn't take as much capital to make them double, triple, quadruple in size. It's relatively little liquidity or money as far as that's concerned. So just wanted to give a quick visualization of the different markets and like this is why altcoins and Bitcoin are so attractive because they're just smaller markets and the growth potential is much bigger. The growth potential of Bitcoin, is much bigger than the entire S&P 500 and much bigger than the potential growth of the entire real estate market, I guess, as far as market capitalization. So, yeah, hopefully that is kind of a helpful representation or visualization of what we're dealing with. So we are in this tiny, tiny, little itty bitty market. And so that's why it's so volatile because, it doesn't take much to double the market cap, but it also doesn't take much to cut it in half. So it's very volatile. So you'll get 80% drawdown, contraction in that market, and then followed by a 2 to 300% increase, and then 80% drawdown. And so it's just the booms and busts of that market are very large, but therein lies the opportunity. So, the S&P 500 is much, much slower. On a good year, you'll get 30%. So that's the market that we're dealing with, and so we need to be aware of the volatility because of that, and also the types of investors that are investing in these tiny risky assets typically are not your seasoned investors that have been around for decades growing their wealth in financial markets and really understand risk management and all the rest of it and portfolio balancing and everything else. It's guys like you and me who need to make a bunch of money because we're broke. So there's a lot of gambling going on in this particular asset class. And so the drawdowns are also pretty violent too because people will jump in when they're excited and they will jump out when it's scary. And so it's just very volatile. But if you know that going in, well, then you kind of have an idea of what you're actually dealing with. So that gives us an idea of liquidity and market cap. So basically, the higher the market cap, the more liquidity it's going to take in and out in order to move that bubble. So if you're looking for altcoins, you're like, okay, well, theoretically, then the smaller the altcoin, the in market cap, the larger the upside. If you had, 100 billion market cap token versus $1 billion market cap token, well, you would think, well, this $100 million um, token market cap has a 10x potential just to get up to a billion. And so a lot of people will fall into the trap of, oh, the smaller market caps mean the higher returns. That's true in theory, uh, but they're not taking into account the downside volatility of it. Sure, it's a smaller market cap. It's going to go down 90%, and you need to be aware of that. And so, in a way, the entire crypto market really is you're risking what you put in, and you can have major outsized returns. So, really, my personal take on what to look for and what to invest in is I don't really see any. If you go to coin market cap and you're looking down to see what to invest in, I don't really see a serious reason to go past the first one or two pages, if I'm being honest, just because essentially when liquidity comes into the altcoin market, most of it is concentrated into the top alts anyway. If you could find a small altcoin that could do 1,000x, but your chances of finding that are extremely thin because there are tens of thousands of altcoins. So you can really cut the crap and just eliminate 98% of all of the tokens. Yeah, maybe there's a gem in there that's going to go off to be the next $1 trillion business. That happens, but are you going to find it? I really doubt it. It's not that's not putting the odds in your favor. So my thought would be stick with the top 200 because there are projections for the capital inflows to the crypto market right now are estimates of, maybe $10 trillion global market cap. So that would be an increase of, let's say, what did I figure earlier to be about 5 to 8 trillion. It'd be 8 trillion, 5 to 8 trillion basically dollars coming into the crypto space. So if you have, $100 billion token, even, you could double that relatively easy if you had an influx of $5 trillion, 1,000 billions. It's a lot of money coming into the space. So all that capital influx, even into the top 200, is going to push prices very high. And that will not be distributed evenly across the board. It will obviously go in fluctuations and cycles. Different narratives will pop off. And when that narrative dries up, that capital will rotate into others. So you may have concentrations of capital flowing around, and those are where the opportunities are. So you could think about diversifying into a couple different narratives, but almost just picking the top performer or the top dog in that niche because it's already got attention. It's already proven itself earlier. If you look back in the charts, if it's run strongly when others or when the market's hot, it's probably a pretty safe bet because the whole game with the entire altcoin space is just liquidity. Money's coming in, it's going to push the markets up. It's about as simple as you can make it. I would say most people overcomplicate it and they try to get super into the fundamentals and all the other stuff. It is important to have an idea of where your money is. And I think that you should look into those things just so that you have the confidence yourself. If you can look at what is this project, what does it do, what's its revenue streams, just to maybe be comfortable that like, okay, this is, you know, this isn't a scam, basically. And but I don't find the fundamentals to have had uh, such a major impact. A lot of crypto is attention and finding out where the money actually actually is concentrated, which we'll get into there. So anyway, as far as market cap goes, when you're looking for tokens, I wouldn't go past the second page. I don't think there's any use for it, especially this late in the cycle. When you're later in the cycle, it's a little bit more risky to get into these things. So just keep it simple. And stick to the first page if I'm being honest. Like I think that would be really helpful. The next thing I want to get into is TVL, which is total value locked. So in each of these protocols, we'll start with Ethereum because it's like the number one or the original altcoin. There's $47 billion of value locked on the Ethereum blockchain in DeFi, meaning there's 47 billion actual dollars on chain in various protocols on Ethereum. So people are buying and lending and using various decentralized exchanges. And so there's a whole economy going on Ethereum. And that total economy is worth $47 billion. So without going even down the list, like Ethereum's the first altcoin, it has the most value locked, it's the most utilized. There's different metrics on here where you can see the fees generated in a year, and like yeah, they're different, they're revenue for 24 hours and for the year. And so I mean, if they're making money, they're accruing value for the stakeholders of Ethereum. So you can be pretty sure that it's not going anywhere. And you can basically just stick to the top performing blockchains and just kind of go down the list and see how much value is locked. Is it increasing? It's like one example here. I've never heard of Sonic. Like this is brand new to me, but you can see that even during this downturn, we've just had steady growth, which means behind the scenes somewhere it's accruing value. Do we need to know why? Do we need to know the exact fundamentals? Not necessarily. We just know that value is accruing on this blockchain. So it's interesting, especially when the market's going down. So that has my attention. I might want to look a little bit more into Sonic. In contrast, you can see Arbitrum, or excuse me, Avalanche, just flatlining. Am I interested in anything on the Avalanche blockchain? Well, not right now, because has not been accruing any value on chain. There's no actual dollars. What this really means is that there's $1.2 billion of people's money, meaning they trust the protocols to go in there and participate in the various economies that are on chain there. But you can see with Avalanche, there's a lot less confidence than some of the other blockchains. This is a very simple way to just see. I mean, money talks. Where's the money? DeFi Llama is a very useful tool to get in here and just check. Like, for example, I'm interested in Sui for various reasons, but it has had nice, steady growth since inception. Nice, steady growth. Of course, as the market turns down, people withdraw. I mean, this is all just part of normal market behavior, but it has been increasing and accruing value over time since inception. And then if I want to get a little more granular, I can come down in here into the separate protocols of this blockchain. Not only do I have high confidence that this blockchain is going to perform well and accrue value over the rest of the cycle and increase in value, because there is $1.2 billion of actual money in Sui on that blockchain, that's $1.4 billion economy, meaning that money has the opportunity to flow around into the various protocols. One of them that I have my eye on is Cetus, which is a decentralized exchange. And if you haven't been involved with the markets very long, I will just tell you that the dexes on a particular blockchain usually perform pretty well because that's where there's a lot of exchange in those places. And so the revenues generated by these exchanges typically get rewarded back to the token holders to some degree or in the form of staking. So there's incentives for people to park their money in Cetus because they're going to be collecting a portion of the revenues from this DEX. And so far there's $138 million accrued on this DEX. So that's something that I am interested in here. And so I just kind of go through and find out, well, what's the protocol that has the most value locked? Kind of hinting to me that there's interest and growth potential in those particular protocols. So, I might be interested in Sui, but as a beta play, meaning as there's another asset class on Sui that might actually see outsized returns. So, for example, the last run up we had, where we had Sui increasing in value, we also had Cetus increase in value, And what we can, let me just do this real quick because I'm curious. Uh, yeah, very, very short-lived. You can see that it looks like Cetus was kind of in a distribution against Sui and has since fallen off a cliff here. But there was during that last run up, it was very, very, very brief. But when the markets were hot and things were actually moving, there was a point where, let's just go from the bottom to the top. There was a moment in time where Sui had a 200, or excuse me, Cetus had a 200% increase over Sui. And in that same amount of time, let's see. Well, I won't get into it. Sui did like a 4x. So essentially, in that time, Cetus did an 8x. So you could have put a little bit like if you were really confident in Sui, you could put the bulk of it in Sui, and then maybe have like a 10%, 15%, 20% side bet on Cetus because you have a confidence that it has the potential to outrun Sui. Because again, going back to the market cap and the market size, what I'm really saying is that, maybe Sui is this big, Cetus is this big. It's not going to take as much capital to increase the value of Cetus over Sui. So these are all very helpful ways to just basic things that hopefully give you a broader understanding of the markets that we're into. So this is this, because my thesis is liquidity, I focus mostly on that. Other people have different areas of and how they want to interpret the market. I find the easiest way to interpret these markets is liquidity because the bulk of any investing right now is a liquidity game because of the debasement of fiat currency. And that's a whole subject for another day. And we'll be learning more on this channel. Comment down below if you'd like to, learn more about this because I think it's pretty fundamental in investing in general. So yeah. So anyway, so we've gone through some liquidity and some market cap, and we've gone through DeFi Llama to give us an idea of like how much money is actually on these blockchains and where the money actually is. Like I said, Avalanche is pretty much flatlined while Sonic is going up in value. So from there, take it away, check it out. Maybe there's a couple protocols on here that might be interesting, or you just you know you could see because of this growth, Sonic may have some potential upside. Nobody's really talking about Sonic, but in the background, it's accruing value. So that tells you something. So let's see. Let's go to some charts here. And let's just say, for example, Cetus. And you know what I'm going to do actually? I'm going to go to a blank chart here quick because mine are messy. I want to talk about buy zones and some support and resistance here. And then we will also get into overbalance and time and price. So I've just kind of quickly walked you through some of the ways that I might go into the marketplace and look for where to find value. So we've already seen that SUI has been accruing value since inception. And we know that for brief periods of time, Cetus is a decentralized DEX on SUI that could possibly outperform it for a period of time. And so let me just actually go to the daily chart, a little more granular, a little more data. So basically what I want to do is I want to go through this market and find areas where we've basically had a nice run up from. So I can draw a nice support here. And you can see that we had some pretty strong price action from this point. And another way to look at this too would be you can see right here where these large candles are originating from. What I like to do is I kind of like to just draw a box around that zone and drag it out. And as you can see, I mean, it doesn't always, I mean, if the market's going to fall farther, it's going to fall farther, but you can see that it typically has some reaction to that zone. And so then at that point, we can go down even farther, and I might get a little more granular just to see. And we can come down here and we can find other zones of price action where we had large buying coming in. So there's a nice little zone like right here where price action, and another one down here. You can see like just where did we have strong reactions and strong buying? These large candles basically indicating large buying. So these is a very simple way to kind of show on a chart where there is interest. And so let's just drag them across and see what the markets did in these zones. And you can see all I did is just find these zones, drag them across. This isn't magic, but you can see that there are reactions in these zones. There are basically zones of interest is what, or areas of interest is kind of the way I like to look at it, because there could be buyers there, but maybe not. There was some interest here, a little bit of buying, but then it became an area of interest as far as selling goes, because price action came back up into this zone, and this was an area of interest for sellers. So anyway, that's like a very simple way, and then I can put this back on the daily time frame. And so you have these zones under the market where you can expect to see some kind of price action. Because we don't know exactly how far this is going to go down, although we can look at the past, what has CETUS done before? Okay, it's had an 82% correction. There's not enough data on this chart really to, know exactly how this particular token behaves, but all we do know is it went down 84% in the last drawdown. We've met that criteria. We're in the buy zone. This may be a good place to start being interested in this project. So if you had money on the side, you may want to start purchasing in these zones or in these areas, and then if it goes against you, you have this other support here and these other zones to average your price down. Averaging your price down can be dangerous because in a bull market, eventually, the trend is your friend until the end when it bends, right? So buying the dip is a great strategy until the end, when buying the dip becomes you're in a bear market and prices never go up. So which, if you have enough capital and you have a strategy and your plan is to just keep buying the market no matter what, like if I'm going to buy Bitcoin no matter what, you can be a little bit indiscriminate of price. But what we're doing here is a little bit different. So you do just have to be aware of the risks of averaging your price down in something that could potentially go to zero. So you need to have a limit in mind with how much money are you willing to lose. If I have conviction here, if I had conviction here, let's say like I like this area, I have $2,000 that I want to put into this, or I have $200 I want to put into this. If prices fall below here, it's probably going to the next one. Maybe I cut it at a 24% loss, try to get another entry, and then the upside is even more. Find a way yourself that you can live with yourself to where if you put money into this market and it goes against you, you have a plan. That's the whole thing. How much are you willing to lose, and then form a strategy to, cut your losses early and give yourself multiple chances to enter a market. But don't just keep throwing money on it, because I've made the mistake myself of trying to catch a falling knife, and you just keep adding money into it, trying to catch the bottom. The bottom never comes. It just so happens to be, a really tiny micro cap coin that isn't going to go anywhere unless the market's hot. So again, the dangers of being in a low cap, the lower the cap you go, in a way, like the more aggressively and harder it's going to bleed. So these are the things that you need to be aware of. Okay, so we have some areas of interest for CETUS. We have some ideas of where we might start to get interested in this market. And let me go back to the daily. Okay, I'm just going to draw a couple trend lines here because like that. Okay. So we have a couple trend lines here. We are in a downtrend. It's just clearly down. Lower highs, lower lows. That's what makes a downtrend. This lower is lower than this. This high is, lower than this. So we're in a downtrend. do I expect prices to go up from here? Well, we're in a buy zone. That's great, but that doesn't just mean that prices are going to go up from here because, because we are in a downtrend. So what we're looking for really is we are just looking for an area where prices are able to get above these trend lines. And I know this is a little messy, but let's just hang on for just a minute. What I am going to do, and let me take this off log here. This actually is probably more useful here. Actually, let me just put this back on log. Okay. So one thing I want to do is measure out this, the overbalance in time and price that I've been talking about. Actually, you know what? Sorry. I'm rambling a little bit, but I just had this idea. This actually does, I do a lot of this longer term stuff on logarithmic scale, but in order to get a little bit more accurate measurement for this overbalance anyway, we're going to want to use this here. So in this downtrend that we have here, what was the, and I'm going to kind of start it from right here. What was the longest period that we were able to push prices up? So in this right here seems to be like the longest run, but then I'll go down and I'll measure it out here. And like right here, it looks like we were able to push prices up for an additional day compared to this. So what I'll just do is I'll just drag that over one day. So now I have, I measure what's the largest price frame that we have and what's the largest time frame that we have. And that just becomes my measuring stick for an overbalance in time and price. Then what I'm going to do is I'm going to put this on the very lowest point that we have here. One of the things I like about taking it off of logarithmic is it really does showcase, again, the liquidity. We're going to hammer that home. No liquidity in the market. Liquidity comes in, pumps prices up like crazy. Liquidity leaves the market, it drops like crazy. And this happens over and over and over again. And it's really these upside swings that you want, that are interesting and you want to capture. And you can see that these upsides are typically follow longer sideways price movements that are, tighter range, things like that. And they accumulate and then they boom and then they bust, then they accumulate, then they boom, then they bust. And it looks like we're kind of, in somewhat of a, we're calming down. The volatility is decreasing, and we're getting tighter ranges. And it looks like, eventually the selling is exhausted and it's ready for the next leg up. So either way, what we have here, I wonder if I put that back on log, if that's going to translate. Yeah. Okay. So I have my overbalance in time and price here, which means that if we are able to get prices at these levels, so if we're able to breach this line, we've met a price criteria. And if we are able to push prices up for even longer, then we've met the time criteria. And so we've met the overbalance in time and price at this level. And just out of curiosity, if we throw up our 50% tool, how does that get us? So the first criteria would be the overbalance in time and price. And the next criteria would be the 50% tool here. So we'd be in strong territory here. And this is where you can go through various alts and kind of see the different opportunities. Like in this case, CETUS has a long way to go to get to strong territory. And as you go through different charts, as you're investigating and playing detective, you may find, because I have found charts that had a lot of great confluence between like the 50% level and the overbalance in time and price and some major swing tops or bottoms, major pivot points that were in the same zone. And so having price action above that sustained for a period would give you a lot of confirmation, or a lot of, it would increase the probabilities quite a bit that you're going to have success and have a winner there. So the concept here can be the same with all your alts. And then, like I said, that would also coincide with these trend lines. Like you're above the trend line there, above the trend line there. So you're making your way above the trends, and you just, this criteria, waiting for this criteria just increases the chance, especially with how volatile crypto is. So it may seem like, oh man, I lost out on this major move, but if it met the overbalance in time and price and that gave you enough confidence to say, I like what I see, maybe you buy near support. Okay. Well, that's still 100% increase just to the all-time highs. And because you're buying with the momentum, the trend has changed. Looking at other variables, of course, if the market is performing well, okay, yeah, maybe if I bought now, I could get a 400% increase. But the probabilities are not in my favor yet that this is actually going to be a bottom until these larger um, criteria are met. So you pay a premium, but in crypto, I think it's worth paying the premium because you're it's outsized returns. I mean, this 100% when we're already up here, this 100% can happen in a matter of days, or a couple weeks, very short period of time. And once these prices are breached here, it's quite likely that it's going to go to all-time highs. So let's do this quick. So all I'm doing here is I'm typing in the asset that I'm curious about, which is CETUS, followed by USDT, which is the dollar. So I'm basically taking the CETUS chart and dividing it by the SUI chart. And what that does is it gives me a chart of a relationship between the two. And another thing, this is why it's kind of fun because I know that SUI's going to do well. Or well, my thesis is that SUI's going to do very well. I could just park my funds in SUI and forget all about it. I could compare SUI to other different alts. Like I've compared it to Solana, and it's outperforming Solana right now. It's actually completed a reverse head and shoulders pattern on that. But the point I'm getting in here is to use this charting to compare the different assets. So this is CETUS versus SUI, and another thing to consider when you're looking at the overbalance in time and price on the USD chart, what you can also do is maybe take a 50% of this whole range and start looking for strength here, or maybe we start, we break. If we were starting to see price action above, excuse me, this level here, if we were starting to see price action above this level here in confluence with, CETUS overbalancing in time and price, that would give you even more confidence. So there's a lot of tools at your disposal to basically just look at strength and weakness is really how I've come to look at this. Is that's the major thing that we're looking for is strength and weakness, because price targets and having an idea where is price going to go, not as helpful as are we strong right now or are we weaker now? Are we strengthening now or are we weakening now? And that's kind of what you look at. So if we had the overbalance in time and price on CETUS at the same time as we were starting to see price action come back into this zone of accumulation or distribution, then that might give us an extra confidence that we might want to put a smaller allocation into CETUS. So none of that is necessary, but as people are chasing gains, they're going to be doing similar things where they're like, oh, SUI's done really well, but I can get more money out of CETUS. And a lot of people are going to have that same basic idea because that's basically how liquidity works in the markets is it goes from the lower risk to the higher risk. Because CETUS is a smaller market cap than SUI, it's higher risk. So it's probably going to see the liquidity a little bit later, but when it does, it has the potential for outsized returns. One strategy could be you have a position in SUI until you start seeing strength in CETUS, and then you put a small allocation to CETUS for the potential of a higher return. It's risk on risk on risk. That's why crypto is so crazy. Again, you have to just be aware of who you are as an investor and how much money you're willing to lose. So again, drop in the comments on and let me know if any of this is helpful or useful. I don't see a lot of people, I guess, presenting the market like this. It's usually a lot of hype and, oh, this token does this and this token does that. And, I find it easier just to look at the charts and be like, what's strong, what's not. There's a lot of hype on Avalanche right now, but I'm not seeing any growth on the chain as we just saw. So I'm less interested, I guess. Does not mean it does not mean the Avalanche can't perform very well. It does not mean that those things can't do very well. But if you're looking for a sign of confidence, well, money talks, and there's not a lot of money on Avalanche right now, as an example. Not saying again that it can't do well. So, okay, the very last thing I'm going to do is this is the bonus. We've kind of talked to death liquidity and market cap and how they play a role in what we're looking at. But I want to bring up these spaghetti charts is what we call them here. And let me find a date. I should have done this first. We're going to find the low that Bitcoin put in, and we're going to make note of that date. So let's go to Bitcoin. The low, and we'll just call this the low. That was like the capitulation low was on, Monday the 7th. So let's go back to this chart, and then we'll kind of explain what I'm doing here. How do I make this one the big one? Oh boy, I'm going to do it again. Well, shoot. Gosh, I always do this. Here, why don't we do this? Okay, there we go. Sorry. I always do this. But anyway, so what did we say? The 7th. Okay, the seventh was basically the low so far. And so really what I've done is I took a chart of Bitcoin, and I'm on the chart of Bitcoin, and Bitcoin is in this light blue here. You can't even hardly see it. But what I've done is I've taken a bunch of different coins that I'm interested in, and I've just added it to the chart. Different things that I want to track. Like let's say you have a list of 10 or 20 different altcoins that you've heard about or are interested in. You can just click this button right here. Right now I'm going to go and add Hyperliquid because I don't think I have it on here yet. I can filter for crypto, and I'll put hype on there because I don't think I did have it on there, and I do want to check and see how that does. So what I have done is you saw me draw this vertical line on the 7th, and now I just scroll the charts to here. And what this is showing is a percentage change from the beginning of the time date and then its relationship to Bitcoin. So you don't really want to be interested in, especially out of that major low, we're going to be less interested in things that are below Bitcoin. We're not interested in things that aren't outperforming Bitcoin. ADA and HBAR, those were my biggest holdings for a very long time, and they still will perform well. It's just that if you're trying to find out what's going to perform the best, these are some ways to do that. And so we can see that Hyperliquid up here is like one of the top performings out of the ones that I have listed here. So, and I just recently started getting into a position of hype. And now that I'm looking at it, I've also got a small position in Beam. So does this mean if it's down here, it can't perform? No. But right out of the gate, straight out of the gate, the top performers are right in here. So maybe what I want to do is I want to go and take a look at AOS and Arrow. Those are things I've mentioned before. Cpool, I think I've mentioned, and Solana even. So these are all, and the funny thing is I don't think I have Sui on here. Why don't we add Sui? You got to have that. We've been talking about it. Let's see if I'm full of shit or not, or if it's doing okay. Let's see. No way. Let's see. Okay, good. I was like, oh God, I hope that's not Sui. I'd have to fire myself. Okay. Yeah, so right now, Sui's not really acting very strong out of the lows, which is interesting. So, and now this is all, like I said, these are things that I'm interested in. And as you scroll the time, if we scroll time forward and backward, it'll show you kind of the relevance since a certain time period, right? So it's like Brett is the highest performing out of the few days. We can scroll this back, and we could actually even scroll this even farther back, and you can just see how the performance, it does change over time. But it is nice to find a low and kind of just pin it on the low and see where we're at right here. So like I said, I might be interested in looking at AOS and Arrow and Cpool because those are some of the things that I've had in my holdings before, Nasana as well, because these are all very strong out of the lows. Does not mean that these aren't going to perform well, and we will have to keep track of this too. This is a moving target as well, but I would just be less interested in some, depending on, I'm interested in Beam because of the risk reward opportunity I see there. because gaming is, I think, highly undervalued right now. It hasn't had its push, and I think that Beam is probably about the lowest that we're gonna see it. So that's you kind of have to have all these things coming into play. You can't pick one thing and say I'm going to invest based off of this because I am in Beam right now. So far, it's underperformed Bitcoin out of the lows, but it's also in a narrative that hasn't taken off yet, and I find it to be a good risk reward right now, where the downside risk compared to the upside potential is really favorable right now. And I'm finding that in a lot of charts, especially Arrow. So let's just do that real quick. Why don't we just quickly jump into Arrow and AOS right now? Well, in fact, we can do hype as well, which I'm not, yeah, we can do hype as well. Yeah, you can see how strongly we've taken off from the lows. And I think I have an average price here of like 13, $13, $12, somewhere in here. I think I probably basically bought it near the breakout of this support and resistance. Let's go to Aerodrome. Same thing. This looks very similar to the beam chart. We have this sideways accumulation basically dropped out. We're fighting our way into it. But what I mean by risk reward is if I take this here to the downside, we have 30%. So you put in $100, you lose 30 if it goes against you. You put in $100, if it goes to all-time highs, 450%, which is let's just call it, well, no, 450% would be a 5.5x. So you'd have $550 if you're risking $30 to make 550. That's what I mean by the risk and reward. That's what you want to look for. I did the same thing with Beam. When I bought, I think I probably bought right in here. So I had risk to the downside. And I think I chose this low back here. Yeah, of 20, 23, 25% for a potential reward. Oops. A potential reward of another 80%. So those are the things that I found very helpful in looking at. That was AI. AI was the other one I was going to look at. Let's just look at one more. And I hope these are helpful too, because I mean, a lot of these I'm just shooting from the hip here, trying to give as much information as I can, but also show you like this is in a way part of the workflow that I do because I'm curious about the different relationships of the different tokens and everything like that. And these are my thought process as I look into them. So again, here, AOS is sitting, it was very strong off the lows, as you can see. At today's prices, we have, another 33% potential to the downside for a potential 376 to the upside. So I really hope this video was helpful. This is how I view looking for alts. In a way, there's no right or wrong answer to this. You're looking for strength. You're looking for confirmation that we've had a low. And I think the big one, really the big one, is going to be the overbalance in time and price for Bitcoin, because it's really not until Bitcoin takes off that that we're going to see those outsized returns in the alts. I'm fishing a little bit at these lows now because, like I said, I think the risk reward is really favorable, and I'm confident that the low is in, and I'm willing to lose that 25% or 30% if I'm wrong, because I'm possibly able to gain another 2 to 300% by fishing for these lows. So everybody has to have their own damn plan and their own method. But yeah, leave comment down below and tell me what was helpful, what wasn't, if there's anything else you want me to review. Otherwise, stay tuned on the channel. I have a lot of exciting things are coming up, and join the Telegram group. I'm posting as often as I see interesting data. So yeah, tag along, and yeah, drop a comment too down below. What's your favorite altcoin? What are you looking into? And yeah, I think that's all we got for today. Take care, guys.